one characteristic of virtually all big major bull markets is that they all rally much further than anyone originally expects. One of the characteristics to watch for is the size of the consolidation preceding a major breakout, and much of the gains in a bull market will occur during the final euphoria phase, the last year to 2 years in the life of the bull market. So I'm going to show a couple of examples here by what I mean by the size of the consolidation preceding the breakout. I'm going to use the gold chart here to begin with. So back in 2006 and 2007, you can see we've got a C wave top, and then we've got a D wave, an A wave, a B wave, and a long consolidation before the breakout. Once the breakout occurred, gold rallied very strongly for the next 6-7 months, adding 40% once the breakout occurred here. So a long extended consolidation produces a big move higher. Once this C wave topped, and then we had the recession, everything deflated, gold entered another long consolidation, this one lasting a little over a year and a half. And then you can see what the breakout produced once gold finally broke out above that $1,000 barrier and then took off to the upside. It produced about a 90% move before the C wave topped. So a slightly longer, bigger, deeper correction consolidation leads to an even bigger bull market rally. Now I'm going to show you a much larger consolidation. The previous secular bull topped back in 1966 with the Dow at roughly 1,000, and we went sideways for about 16 years until we finished the recession in 82. Finally broke out above that 1,000 barrier, and you can see what that multi-year sideways consolidation produced. It produced a bull market that rallied 1,500%, or a little over. A little over 1,100, almost 1,200% in the Dow. Now I'm looking at a chart of the NASDAQ. You can see here we've got the top in 2000. We've had a very long extended bear market consolidation, which finally broke out above this high last year. And this is the kind of a long consolidation comparable to what happened in the Dow, and that led to almost a 1,200% move. So you can see when I say that 10,000 is going to be a piece of cake and 20,000 isn't out of the question. You can see compared to other markets, this is going to drive a really big rally, much bigger than anybody is anticipating. And you can see the character of the market has already changed. Once this breakout occurs, you can see the market has shifted into a much higher gear and is rallying very aggressively once this breakout was confirmed after the election. This is not a market to fight. You don't want to, unless maybe you're day trading, but you don't want to try and pick a top in something like this where you've got a breakout from a multi-year sideways consolidation. Once that breakout occurs, these things can go a long ways. And we're just getting started here. We're only 6 months into this, so way too early to be trying to pick a final top in this bull market. And now let me show you another market that once I think it does break out, I think is going to go a mind-boggling distance upwards. First off, the gold market. So I showed you what this 1.5-year consolidation led to. We are now 5 years into this one. I suspect it's going to take another 1 or 2 years to get back up to match these highs, and then once this breakout occurs above 1900, I think gold easily, without blinking an eye, it's going to go to 5,000. And I think a sideways consolidation this large, 6, 7 years probably, is probably going to drive a move closer to $10,000 before this is over. But this is not really the market I want to show you. Silver is where the real mind-boggling gains are going to come. We made it up to retest the 1980 high here back in 2011, but we didn't break out. So we're consolidating, building another base again. And when this does break out above this, we're on 27 years now. When we do break out above this, I think silver easily goes to $500, and I would say $1,000 isn't completely out of the question.